All right, welcome to the weekly prep video for the week of November 10th to the 14th. In today's video, I'll be going over the action over the past week of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into next week, like I do with every weekly prep video. So if you guys enjoy it, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting things off, NASDAQ, very rough week here, down 3.1%. One of the first down weeks we've had since this rally started back in April. And like choppy down markets, you get very bearish one day, very bullish the next day, very bearish the next day, very bearish in the morning on Friday, and a reversal at that 50-day moving average, the support gap. Ended closing very strong on Friday, only down 0.3%. But overall, just lots of chop, lots of volatility, lots of frustration, and different than the price action that we've seen over the past, I'd say, 4 or 5 months. So it's good that we did bounce where we did. But until volatility really starts to compress, at least on the indexes, I think it's going to be a pretty challenging market. So instead of pulling your hair out every single twist and turn, try to size lower, do a little bit less, and enjoy the break. S&P 500 also bounced at that 50-day moving average in the support gap on Friday, closing actually positive, up 0.1%. Still down 1.6% on the week, but compared to the NASDAQ, which had been leading, you saw a little bit of rotation where it wasn't just the S&P 500 and the NASDAQ both down super heavy. We did get some rotation into other areas of the market this week, which is good overall. IWO, the growth stocks of the Russell 2000, cracked that 50-day moving average on Thursday with the sell-off where we opened at the high, closed near the low. On Friday, big gap down, accelerated move into a support gap, eventually bounced and closed at the high of the day. Positive for the day, up 0.36%, but also down 3% for the week, and a close under the 50-day moving average. So again, like after the type of like action that we saw on Friday, chances are we do continue to rally, at least to like the 10, 20-day EMA. But what I would be looking for here is a rally back up to those moving averages, a pullback, a higher low, and then a pop back through the 10, 20-day EMA before things get nice and easy to trade. Doesn't mean like you can't buy stuff on Friday. Friday gave you great opportunities as kind of snapback trades. But I think for like a clean trending market, we're at least going to have to see rally back to the moving averages, pull back, higher low consolidation, let that volatility decrease on the indexes, then follow through to the upside. ARKK gap down on Friday, very similar to the rest of the charts. This one, zooming out, kind of just pulled back into the previous base. So like a base breakout check back, and then really strong close at the end of the day, only down 0.2%. Then we can go to Bitcoin. This is just chopping under that 5-day EMA, continues to take out that 100K level and then bounce back, take it out, bounce back. This is just looking like a bear flag to me until we like actually break to the upside and start testing the 10-day, the 20-day. Overall, this looks a little bit like a stage 3 top. Losing the 200-day moving average is not a good look, and is kind of a risk-off signal for the market. Ethereum, same kind of action, like obviously not in an uptrend in the short or intermediate term, right at that 200-day and finding some support there, but just wedging action here so far. Hopefully we do break to the upside, but I'm not invested in this, and I'm not super bullish on this setup. Getting into the 9 liquid leaders, we'll sort this by price percent change this past week. SNDK, just a monster. Ended Friday up 15.3% on the highest volume ever, right at the high of the day. Definitely getting extended here. But until we either get a gap down or a true blow off top, the trend is up. This is kind of capitulation volume, like to the upside, because at some point this was down like 1 or 2% on Friday. Then we snapped all the way back and then closed strong. So this type of volume you'd like to see like earlier in the trend, like we did on September 4th, to really kick things off. But you don't want to see massive volume coming in after a multi-100% move. LITE, new to the list, earnings this past week where it was up 23%. Still, the past 2 days closed over that HVC, the high volume close from earnings, up 19.1% for the week. Very, very strong. STX up 9.2% for the week. Also, kind of trading above that HVC from their earnings. Love the close into the 10-day EMA on very low volume, followed by an unfilled gap up in a reclaim of that HVC in the 5-day. That's the type of action that you see that reignites uptrends. So until you see a gap down, an unfilled gap down in like a loss of the 10-day on a closing basis, I think the trend is still up here. WDC, kind of similar action. Had earnings this past week, just traded basically like sideways up. And while the market was going not straight down, but chopping down, this is great relative strength that we're seeing. We had a bounce at that support gap just above the 10-day moving average in the high volume close on Friday, and then hammered it home. That was up 8.5% this week. MU up 6.3% this week. Again, another one that had that close right in the 10-day moving average, followed by an unfilled gap up on Wednesday, and then basically sideways closes Thursday and Friday, even though there's a little volatility here. Great relative strength compared to the market. BE stock just continues to fight back. Every time you think it's over and the trend needs to build out a base, it destroys shorts once again. We did get a gap down on Friday, but we gapped down, accelerated through the HVC, through the 10-day moving average and the support gap, nearly got to the 20-day, and then hammered candle home, closed right near the high of the day, back over the 5-day and the HVC, only down 1.2% on Friday and actually up 2.3% for the week. First Solar, very similar action, basically flat for the week and down 1.6% on Friday after the gap down test at the 10-day EMA. Solar stocks and specifically like battery stocks are catching my radar right now as themes to focus on. Google down 0.8% for the week. First kind of close under the HVC, at least on an earnings, or sorry, on a weekly basis from their earnings last October 30th. Back under the 5-day, but still bounced at the 10-day and the previous low. As long as we hold the support gap on a closing basis, I think that this is just like a nice bull flag that the market finds its footing where it did. Great relative strength for Google, and this can continue to trend higher. NVIDIA, main weakness this week, down 7.1%, and it could have been way, way worse, but we had an awesome reversal on Friday. We lost the 50-day intraday and a couple support gaps here, rallied back through to close right at the high of the day, actually flat on Friday. And now this is just like a breakout retest area, but not really what you want to see overall. Like you don't want to see breakout on big volume, multiple unfilled gap downs, lose the 20-day. This type of volatility for a name that large as NVIDIA isn't a sign of a very healthy market. So again, when it comes back to the indexes, we want to build those higher lows, have that contraction of volatility, and then follow through to the upside. The leaders are still acting great, so I think the market can kind of go through this correction a little bit quicker than normal. But until volatility contracts, it's going to be a pretty tough market to trade in. Getting into the industry ETFs, covered this with First Solar, but solar stocks leading the way up 2.6% this week. Had a big shakeout on Friday into the support gap right around that 20-day EMA, rally back through the 5-day to close well. Just has been a monster off the lows and has been a really frustrating group because I thought that this had probably bottomed when the tax credits ran out and the stock or the theme didn't go lower. We actually went higher, but it's just been such a choppy mess, like choppy to the upside and really hard to get exposure into solar stocks. So I'm hoping that changes over the next couple weeks, but just a little frustrating. XLE, the energy ETF, really nice how it's building out these higher lows. It's a frustrating theme right now because it's just in a base. And whenever you're in a base, you're going to feel bullish at times and then bearish at times as we build higher and higher lows. And that's what this has been doing. Like higher low, well under the 200-day, higher low right by the 200-day, then higher low right at the 200-day. And now we're starting to see some relative strength here. So money flowing out of some extended tech names into energy, but staying overall in the market, which is a positive. XLV, the healthcare ETF. I can't say enough about this group. I think that we're definitely seeing an emerging theme here. I would say batteries, biotechs, solar, and healthcare are the main things to focus on right now as stocks that or themes that aren't already extended, haven't already made major moves, and can be the next beneficiaries of AI. Just look at this accumulation over the past like 7 or 8 trading days. Every single day, we've closed higher than the open, while the market has chopped well lower. Came into the support gap in 20-day, bounced, closed over all the key moving averages, right near its highs. Not many themes can say that right now. XLF, the financial ETF, I was really worried about this one this week because it had been weaker than most, actually taking out 1010's lows, October 10th's lows. And so far, it's just chopped there, built out a higher low. And then on Friday, we had some good relative strength on volume, getting back through the 5, the 10, the 20-day moving average, right at the spots that we've seen it reject. So I don't think we're out of the woods just yet, but good action on Friday compared to some other themes. Gold miners, GDX, undercut and reclaim of Friday or Thursday's low and the support gap, testing that 50-day moving average, and again, right where those sellers have stepped in before. So we'll see if this builds out a higher low and then can take out that area. Still not a theme that I'm really focused on. This type of volume and the volatility that we saw when we broke lower kind of makes me think that this needs a larger base before we trend cleanly. XLP, Consumer Staples ETF, some good strength on Friday, right into the 10-day moving average, up 1.5% and up 0.6% for the week. XLB, Basic Materials, back through the 5-day moving average, some nice relative strength on Friday and up 0.2% for the week. IYT, Transportation ETF, bullish engulfing candle through the 50, the 20, the 10, the 5-day moving averages, and a pretty nice base here. Like you see the volatility contraction pattern, like one wave down, 2 waves down, 3 waves down. Now we're getting nice and tight. If the market finds its footing, this is another group that we could see some rotation into. PEJ, really good action on Friday. Bullish engulfing candle. Happened on a little bit light volume, but a couple stocks in that group that really caught my eye is EXPE, that was up 17.5%, and then LVS, Las Vegas Sands, up 3.9%. I was treating this PEJ, this leisure and entertainment ETF, kind of as a reflection of the average consumers in America. And we've seen some relative weakness there, rejected at the 50-day. Hopefully, things are turning around. That would be awesome. And with some of those kind of like vacation type stocks actually showing relative strength, let's stay optimistic. But until we get over the 20-day moving average, not a theme that I'm going to be focused on actually trading. XRT, kind of the same idea, down 1.4% for the week, but nice reversal on Friday. We had some strength earlier in the week when it came to the tariffs potentially being overturned. If that's the case, I think a lot of these themes can see some strength over the next couple of weeks. But you, unless you like know like the ins and outs of that decision, which I do not, it's not a theme that I'm trying to front run. But I am aware of some of the stocks that I would be looking at if that is to be overturned. XLY, consumer discretionary, had some great relative strength with Amazon's pop, but then has lost the key moving averages. Little undercut and reclaim the support gap on Friday, still down 1.7% for the week. ITB, home builders ETF, down another 1.7% as well. Continues to trade under the 200-day moving average. Not a great sign. Nice bullish recovery on Friday, but on lower volume. So I could still see this like railing into like the gap here, that 20-day EMA right around $100.50, and then seeing some sellers there. Robotics ETF, first time testing the 50-day moving average in a while. Nice bounce there. Now let's build out some higher lows. KWEB, pretty disappointing action, if I'm going to be honest here. I really thought the Chinese equities breaking out of this 3.5-year base would have just a quick check back, build some higher lows. We had the trade deal with China kind of firmed up and price broke to the downside. So for me, that's like a news failure until proven otherwise. There are some stocks, Futu, Pinduoduo, Baidu, Baba-ish holding in there, but not as much strength as I expected from this theme. Cybersecurity, a lot of individual stocks within this theme are really strong. CrowdStrike looks incredible. Zscaler could be viable over the previous day's high. Net kind of pulled back into its earnings gap up, and The underlying ETF, not very strong under the key moving averages, but some individual names within the group are still holding up well. This is one where, well, always I would kind of look towards the leaders more so than the ETF, but especially when there's a divergence, I stick to what are the leaders within that ETF doing. So I'm not as worried about cybersecurity looking at the ETF chart here as I am focused on the leading stocks. Because in the end, as a swing trader, the goal is to be in the liquid leaders in the leading themes. If the theme can start to turn around, you want to be in those liquid leaders first. ITA, aerospace and defense, a theme that had led off the lows, was one of the first ones to get into new highs. Now starting to go through a little bit of a character change, couple of gap downs, first test of the 50-day moving average in a while since September 9th. So let's rally up, let's build some higher lows, take out this resistance gap before we get too excited. XME, the metal and mining stocks, these have been beaten down from kind of this parabolic top. Couple closes under the 50-day moving average, and finally a bullish engulfing candle on Friday on big volume. We saw a lot of precious metal names snap back on Friday, so my guess is we do continue this rally at least into the 20-day EMA, and then from there, this just looks like the left side of a base that's going to need multiple weeks to actually build out before some nice trends. IYZ, telecommunications ETF, little undercut of a couple gap zones, but still under all the key moving averages. Biotech ETF, XBI, I did take this on Friday. Well, I bought LABU on the undercut and reclaim of the pullback lows, right as it was reclaiming the daily VWAP as well. So bought right at 107-ish area. Stop is going to be Friday's low. And this is something that I would look to continue to add exposure to. If we get a pullback into that area, that would still be a higher low overall. And I could build out that exposure if the market's coming down and this is showing relative strength. But biotech, I think that along with healthcare and healthcare related names are themes to focus on in the last part of this year, beginning part of next year. FDN, Internet ETF, this got just thrashed with Meta's earnings under all the key moving averages. Little bounce on Friday, but needs a lot of time to shape up here, down 4%. Semiconductors finally started to see some weakness here this week, down 4%. Couple of gap downs, but really nice rally back up on Friday on big volume. So nice accumulation. This is a group that if the market's going to continue higher after a while, we need to see this reclaim those moving averages. And we don't want to see like another gap down after it close like Friday. Blockchain ETF and kind of data center related names under the 50-day moving average, not very strong there. IGV software ETF down 5.2%. This chart just looks horrible. There's plenty of software names that are still acting okay, and those are the ones that I would be focused on. But as a theme, this needs time to really snap back and see volatility contract before I'm very excited about it. MSOS, big reversal on volume, up 7.4% on Friday, still down 6.5% for the week. Potentially, this is a sign that maybe the government shutdown is ending soon, because the idea behind this is the government can't reclassify cannabis if the government shut down. So that's why we've seen during the shutdown lots of weakness here. And maybe someone knows something on Friday. I don't know. I'm not trying to front run this news, but some good volume and a nice rally back up on Friday. So we'll see. UFO down 8.7%. Just tons of weakness here. Um, down 8.7% under the key moving averages. Lots of names in this risk on group got hit. So just a sign that the market was pretty rough for some growth names last week. ARKG, same thing, down 10% this week, losing all the moving averages. TEM reported earnings and just kind of fell through the floor. Not great action there on a theme that I was really hoping we'd shape up into the 20-day moving average and then break to the upside. Nope. We tightened up and then broke to the downside. And then NLR, nuclear and uranium names got hit pretty hard this past week. Really good recovery on Friday on these names, actually up 1.1% on big volume. So hopefully that's like the low of this pullback, but you could just see how drastic the price was the past week, down 11.8%. Not ideal. Before we get into the long setups, want to go through the earnings calendar. We are still smack dab in the middle of earnings, so you need to know when the stocks that you want to own or like stocks within that same group report. Monday, we have PGY, Monday.com, Instacart, BTDR. Those are kind of the names before the market opened that I'm interested in. Then Rigetti, CoreWeave, BBAI, Rocket Lab, ASTS, TerraWolf, Plug, Occidental, MVST. Lots of earnings Monday after the close. I'm not going to read through the rest here, but I always use Earnings Whisperer. They have got this nice calendar here. Then you can go to their website to see every single stock that does report. No affiliation with this, but just really like how they put this out. And then do you want to go over the NAAIM positioning? Because the government is shut down, we don't have commitment of traders data, the COT data. So all we have to work with is NAAIM. This is the active investors exposure index, their actual exposure levels, not a sentiment survey. It gets reported as of Wednesday's close. They aggregate that data and then put it out on Thursday, kind of middle of the trading day. We did see a nice decrease from the overbought levels. Once you get over 95%, that's like my line in the sand where if everyone's already in the market, who else is left to buy? You're probably going to see some frustrating price action, narrowing of leadership, narrowing of stocks breaking the upside, and a lot of false breakouts when you get over that 95% threshold. We were at 100%, 101% last week, and this week we saw as they unwound their exposure, we saw very sharp pullbacks in some growth names in the indexes. Now we're down to 90, which is still elevated, but given the sell-off on Thursday and Friday morning, hopefully we can get this even more unwound. But we'll see how that comes in next week. The more and the quicker that this can unwind back to like 75-ish range, the better. If it ever gets down to 60% while the market's still kind of above key moving averages and you have stock setting up, that's when I try to get pretty aggressive with my positioning on new trades. All right, some long and short setups to cover. We'll go most volume ever or average dollar volume to the least, so most liquid to the least. First up, MU. Any stock that's above the 5-day moving average, right near highs right now, while the market is bouncing off the 50-day, is a stock that you need to keep on your radar. And because the market's under the 20-day EMA, for me personally, I'm not trying to buy anything on strength. I'm trying to buy undercut in rallies. Um, Anything like that would keep my risk a little bit tighter. And position sizing wise, I am lowering my position size because of multiple factors. Another factor is I have not gotten traction on the long side in quite a while. So for me, I'm in like a little timeout or reduced position sizing point. With that said, looking for pullbacks into the gap zone and the 20-day EMA, this 219 area for MU, that would be the spot that I'd be willing to try. Stocks that pull back to their 20-day EMA when it aligns with the gap zone for the first time after new highs is usually a good risk reward spot, especially when the market has gone through a pullback, which it has the past week. So we'll have alerts at that 218 area. QS, this is a battery type name. QS and EOS, which we'll cover in a second here, great relative strength throughout the pullback this past week. Couple bounces at the support gap right around $15. In hindsight, that was a really good spot to try some, especially with the strength of EOSE, excuse me. But came back through both of those support gaps, the 20-day, the 10-day, and the 5-day to close nice here. Would look for a pullback into that 20-day EMA and then a recapture of the daily view app. So a little bit of morning weakness followed by strength. So I can keep my stop under the low of the support gap. Right around $15 would be the stop there. And we'll play that for a larger move because the theme is showing relative strength while the market went through a little pullback, well, a decent sized pullback. Um, that's a theme that I want to be focused on and a little bit more patient when I'm holding on to a winner. Let me just jump to EOSE because it's the same kind of theme. Monster candle on Friday of 19.4%. Beautiful flag. the entire time. Earnings did not sell off. We just kind of consolidated. And then on Friday, took out Thursday's lows, rallied back through the moving averages, and then Friday's high, and then just right into the close. Massive strength here. This is another one where I would look for some weakness, like a 1 or 2 day pullback, recapture the daily view app, especially if we could pull back like sharply on Monday into this like 1650 area, recapture that daily view app. That would be the buy spot versus whatever the low of the day is or the 10-day EMA, whichever is lower. Next, we have Nokia. Awesome move up from $4 up to $8. Then we've pulled back into the 10-day moving average. Look at how much volume has dried up. As price has compressed here, we have equilibrium at this point. So from this compression is going to come expansion in one direction or the other. If you tell me, hey, Nick, we've got multiple unfilled gaps to the downside after this explosion candle that we never followed through to the upside on, this is actually a good short. Wouldn't argue with you. Because we have such nice compression of both volume and volatility, price volatility, break through today's low, stop at today's high. That's a good short. You can manage your risk there. But for me, we've undercut the support gap, got to the 10-day, and then closed relatively well. So through Friday's high, stop at Friday's low, under the support gap, under the 10-day EMA is the trade for me. USAR, I'm going to kind of group this with TMQ. A lot of the precious metal names that got absolutely clobbered over the past like 3-4 weeks, starting to show signs of life. The first one that got going was UAMY. This one was a perfect parabolic top to short, was one of the better trades of the year. And if you want to look at parabolic shorts, this was a perfect one to go through. Went from $20 pre-market all the way down to $6.20 just a couple trading days later, a couple weeks later. Eventually found support at a support gap, showed some relative strength on Thursday, then powered through on Friday. I can delete that gap down zone, and then we came right into the 10-day. So now that we have evidence of at least one of those stocks showing strength and popping back to those key moving averages, I think we're going to see the dominoes fall on the other ones. And like that, USAR gap down on earnings on Friday, opened on the low, closed on the high of the day, up 9.7% after it was down, I think like 8% at one point in the day. Just looking very similar to EOS, a little gap down and then a green or a red to green move where we take out kind of that pivot high 1740 area. That would be buyable. Stop at whatever the low of the day is on Friday. TMQ, very similar story. Had a massive move up to $11.20, faded all the way to 380. So anyone who bought here got absolutely destroyed. Anyone who tried to buy on the 20-day got destroyed. And now they're probably giving up on trading these names. And that has been me in the past where I'm like, okay, that's probably enough. It's going to bounce. And then after that gets taken out, I just throw away the setup. But now that we've seen a name in that theme start to break to the upside, these are mean reversion setups, not stocks that I think are going to go back to their highs, but can be meaningful cash flow trades. We've bounced at the 50-day moving average, took out the lows of this pullback, and then closed well. Now we've got a nice clean pivot to work with, right around $4.15. Break through that level is buyable. Stop it, whatever the low of the day is tomorrow or on Monday. Futu covered this with the Chinese weakness, but this one is actually showing some strength. Overall, this is the only Chinese equity that is right at its all-time highs. All of the others are still kind of breaking out of stage one bases at this point. So instead of trying to trade those, we could trade the strongest name in the market. Still don't want to trade on strength because we have weakness in the underlying ETF or the underlying theme. So instead of buying up here, we want to be accumulating shares near that 50-day moving average or that 20-day. So between that 180 and 177 area, then keep your stop at 173. That would be the trade for me. And you could build in on weakness. And then as we turn around and show strength, then you could start adding to the trade as you see, as you get strength. But that first like couple shares where you want to get the position on, I want to get it as close to the moving averages as possible so I can manage my risk nice and tight and then add if it becomes a winning trade. GH, one of the themes that I've talked about is healthcare and healthcare related names. Just phenomenal action post earnings, up 28% on earnings on the highest volume in over a year. Did a secondary offering from November 4th to the 5th. And after that offering, completely got soaked up, closed back over the HVC and the 5-day moving average, big volume there. Through some weakness on Thursday and Friday in the market. Great action closing over the 5-day EMA both times. We do have this resistance gap, so I don't want to be buying into strength, especially with the market as volatile as it is. So a pullback into that high volume close right around 92.50-ish area. That would be the buy spot with the stop at Wednesday's low and the 10-day EMA just under $89. LUMN is up next. We got the 200-day in an uptrend. Now the 50, the 20, the 10, and the 5 all in the right order. Huge accumulation volume. Nice move on earnings after a gap down test of the support gap and the 20-day. Followed through to the upside November 3rd. Chopped a little bit with the market weakness and then came back into the 10-day and the HVC on Friday. Same spot, that 1030 area would be buyable for me. I don't want to be buying this on strength right before a spot that I know there are sellers at 1150. So even if we like undercut, actually perfect world, undercut Friday's low, recaptured the HVC at 1020, what is that, 1028? That would be the buy spot. Then I could keep my low, my stop at the low of the day, wherever that is. Rambus, one of the better semiconducting acting names. Huge volume here on earnings. Nice accumulation where we gap down and then right back up. Whenever stocks do that, it's something that I keep on my radar. Good relative strength, pulling back just into the 20-day as the indexes pull back into the 50-day. Undercut and reclaim the 20-day into that support gap on Friday. Still don't want to buy this on strength because of the market volatility. We'll wait for another pullback into that area. Doesn't need to completely undercut the support gap low. If it does, I would want to see like significant market weakness. I don't want to see like the market holding up while this just comes right back to the low. That's not ideal. But if the market's under severe pressure and then this comes back into the support gap, then we can manage our risk against the 50-day moving average and keep the trade nice and tight. SEDG, kind of speaking of stocks that completely turned it around post earnings. This gap down, this is a solar stock, gap down on earnings and then immediately got bought up. This bar, let me measure it because it's absolutely insane from low to high. 37.5% on massive, massive volume. Let me draw a little close line there. Then we just had two lower volume pullback days into the 10-day moving average, the 20-day. Almost got to the 50-day, and I'm kicking myself because I saw that spot on Friday and I just didn't want to add exposure. Dumb, dumb of me. That was the spot. So that's the spot that I'm watching between that 37.20 where the 20-day EMA is and the $36, the 50-day moving average. Accumulate shares there. Get your stop under the $35 area. 4 or 5% risk on a name that is in a leading theme. And after a move like that, I rarely see stocks have that type of action and then just like get killed. So pull back into that 50-day moving average, even the 20-day is a spot to watch. FLNC in that kind of battery clean energy space, one of those leading themes. Perfect undercut of the 20-day in the support gap on Friday. That was a beautiful spot to get in at 1811. Nice rally and close back over those key moving averages. Just looking for a higher low pullback into 1917, that support gap. Then we can manage our risk under that 1815 spot. About 5% risk there. You could size that down a little bit if that's too much risk. PL, a name that had the highest volume ever on September 8th, went through a secondary offering and closed above the 5-day moving average the entire time it soaked up that offering, got nice and tight, then broke to the upside for about a 75% move. We have been pulling back and just flagging out here. And as you saw, like volatility in the market really pick up, this hasn't been that volatile. It's been like a nice, clean pullback into the 50-day moving average. We undercut Thursday's low, undercut the 50-day, reclaim both of those and the support gap low. That was a buy spot and the spot that I'll be looking at on any more market pullbacks. We do have the gap down on Wednesday. So buying like into strength on here is going to be a little bit more challenging. Not to say you can't do it because I mean, this is a really nice like pullback into the 50-day. So if anything's going to work on strength, I think this is a type of setup that would But given the market volatility and my losing streak of trading on the long side, I'm going to be patient, wait for a pullback into the support gap area. Doesn't need to completely undercut the low here, but into that area, then a recapture of the daily view app would be the buy spot for me. Stop at Friday's low. ATEC, another healthcare related name, gapped out of a 10-year base. We can go to the monthly chart here. 10-year base breakout from 2015 till now. Very strong action, closing over the 5-day moving average the entire week, while the rest of the market was very choppy. You could take this on strength. It's another one that would probably work just through $20, but a pullback into the high volume close, then you can manage risk against the 10-day EMA and keep risk nice and tight there, which is, again, for me, something that I'll be doing. Then earlier in the video, we talked about XLE as a potential group that is emerging, where we saw those higher lows build out. PARR, probably one of the leaders within that group, along with DK. Huge strength after a nice shakeout on Wednesday. Ugly close, gap up. That's how you reignite uptrends. So after that type of move, I think we're ready to break out just to the upside. So through 41.50, that would be the buy spot. Stop at the 10-day EMA, just under 39.50 would be the trade. Then on the short side, we'll still go most liquid to least liquid. First up, we have Palantir, which to me, this feels like a late stage base. It's already made just a phenomenal move. Definitely a chart to study from $6 up to $210. Phenomenal earnings, and we gap down on that. So if earnings are perfect and we gap down, to me, that shows like this is a news failure and this has been priced to perfection. At this point, we need like a pullback, a full another base. And this kind of feels like a base breakout at this point, like a late stage base breakout. Still, I don't want to short into the hole. I don't want to short on weakness, especially because the market has already gone down for about a week. It's probably going to have some type of snapback rally. So instead of shorting on weakness, I want to see a rally back up into the 10-day moving average, right around this 187 level. If we continue to rally into the 190 resistance gap, I would be even more comfortable shorting that because then I could get my stop nice and tight. But with this, you want to see a snapback and then weakness to confirm a lower high overall. You don't want to just be like, hey, this is rallying back into the moving average. Let's randomly short this because the market can rally for 2 or 3 days in a row after the type of distribution that we've seen and still be in a downtrend. So watch for the rally, then weakness to come in, short after a loss of the daily VWAP, and then keep your stop over the resistance gap high. Costco just gives you opportunity after opportunity to short this. We've had a monster stage 2 uptrend, a very large stage 3 topping phase where we failed multiple times at the 200-day moving average, which is in a downtrend, then the 50-day moving average, which is in a downtrend. Earlier this past week, we rallied up into the 50-day and then failed. On Friday, another rally up to the 50-day and reversed, lost that resistance gap and closed red while the market snapped back. Huge relative weakness compared to the market on Friday, at least daily closing range wise. And now this looks just ready for a stage 4 decline. There is obvious buyers right around this like 905 to 910 area. So I don't want to short in the hole. I want to short as close as I can to the 50-day moving average so I can keep my stop above Wednesday's high. So just look for a little rally up into that resistance gap, $935 area, and then keep your stop at 946. Let me save SNDK for the last. BMNR, this is related to Ethereum, which we cover that chart. It's in a downtrend. It's struggling at the 200-day moving average. But everyone sees the 200-day moving average. Everyone sees the struggle. This is already broken down quite a bit from the resistance gap, $65 to $35. Like anyone buying this on strength after it made a move to 150, I don't really know what you were doing, especially because we had so much evidence that there were sellers in this resistance gap area. Just not a name to buy on strength at all. Then multiple resistance gaps lower, and then we had an accelerated move down. Now with the price action and the volume on Friday, where we undercut the low, reclaim this, you want to give it time to snap back before you try to reshort. So a couple days rallying back up through the 10-day into the gap zone here. Whoops. Gap zone here. and the 20-day EMA right at 46, $47. That would be the spot where I'm more interested in, because then you could keep your stop at $50 and the 50-day moving average, keep it relatively tight there. Um, but after a couple of days, I think the 50 is probably going to catch up to that area as well. So you can keep your risk even tighter. So let it rally. You don't need to short after 5 days down in a row. Same with MSTR. I didn't put it on this list today, but I think same thing. Like we saw a big accelerated move down, then a reversal on Friday. Let it rally back up to the 20-day, the resistance gap, that 275 area. That's the spot that I would be looking at to reshort this name. Roblox, same thing, down on earnings. You don't want to short after the move down already. Wait for a snapback rally. Just looking for a rally back to the 10-day and the high volume close from earnings at 113, and then manage your risk at the 20-day EMA at 118. MMYT, another example of a stage 2 uptrend, stage 3 top, multiple failures at your declining 200-day moving average, and then eventually we snap into our stage 4 decline. If you know stage analysis or you've studied that from Stan Weinstein, you know that these stage 4 declines, they don't just rip back to the upside. We've seen just multiple selling days right at the 5-day moving average. Look at all these upper wicks. So that's where I would want to get short. Another rally up into the 5-day or even the 10-day at this spot at 80.20. Then you can manage your risk over 82.50. Keep about a 5% stop on that trade. ARQQ, one of those quantum names that really is just very, very weak. IONQ, much stronger. RGTI does report after the market closes on Monday, so maybe wait until Tuesday for this. Because also, like we've seen a move down, we want to see a rally back up into the 10-day moving average, right around that $38 spot. So we can keep our stop over $41, the 50-day, the 20-day, and the gap zone. So the more that we can rally up, the better the setup would be as we lose the daily VWAP. And then finally, SNDK. Wanted to save this to last because I still think this is probably a day or two away from being ready. We have kind of capitulation volume to the upside on Friday's move. Another gap and strong close, like this bar. If we get a gap up, strong close, and then a gap up on Tuesday, that would be where I would really look for a parabolic top on this move. It's rallied from 42 up to $240, so about a 500% move without even testing the 20-day EMA, which is extremely strong, but also extremely extended at this time. But to study parabolic tops, you can look at UAMY, which we saw multiple unfilled gap ups while volume went higher and higher and higher before eventually we had an exhaustion gap up that got sold off. You can look at MSTR back in November of 2020, or November of 2020. Highest volume ever, gap up, and then eventual exhaustion gap. So it's that multiple gap ups with volume increasing on each day before that true blow off top. Same with SMCI back in, was it February? Yeah, February of 2024. Straight move up, volume picking up with that move higher, and then one gap up, two gap ups, third gap up. That was the kind of top of that move with that acceleration and that volume pickup. So when you try to short these extended names, you can't fight the trend. Like if you short it on the loss of the daily VWAP and price comes back through that area, do not stay short because this can squeeze another 20%, gap up another 10%, and continue to squeeze higher. You really want to stay on the right side of the daily VWAP if you're trying to short these names. And if it's not something that you've studied before, it's not your strength, don't short it. This is the strongest stock in the market. There are other setups to trade. So that's going to be the weekend prep video for the week of November 10th to the 14th. I hope you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great rest of your weekend, and I'll see you guys in Monday's video.